Hello everyone, and welcome back to the Velocity Channel, where this is your bridge to financial freedom. We have yet another person that wants to get out of debt much quicker than the banks are allowing them to, because they want a plan that is not on the bank's plan. And we're going to hop right into it. But before we do, can I remind you to like, share, and subscribe this video so that others can be free from the wheel of debt, and we are going to get into that a lot later. Now, notice what this person has first, okay? On the loan side, they have $210,000. That's going to be the home loan, of course, at 7.8%. They're paying $1,810 each and every month. But on their line of credit side, now a lot of people think that this is a bill. But we're going to show you that it's much more than a bill. It can actually be used as your new checking account. Look at what they have. All this beautiful money, all this beautiful credit that they have. Look at this. Balance at $13K, but they have a limit of $25K on one line of credit. Balance of $10K, but they have a limit of $12K. On another line of credit, balance $6,500, but their limit is $8,000 on the balance. On the last line of credit we're going to be going over, $2,100, but they have a limit of $8,000. Now, some of you may be like, man, that person is in debt. I'm glad I'm not that person. However, look at how much money they were trusted with. 25K, 12K, 8K, and another 8K. And when we use our line of credit as our new checking account, you're going to see them disconnect all these balances very quickly. Now, let's go ahead and show you what we mean when we say wheel of debt. Before we solve this problem, we want to give you a foundation as to how, I almost said the man, but society is training people to use their income. Society wants you to use your income. Let's just say it's $3,900 a month, as in this example. Shout out to Ron. Thank you so much for wanting to get out of debt. What society wants you to do is they want you to put your income inside of a wheel of debt. What do I mean by that? I mean they want to segregate your income. They want you to get groceries and segregate your income that way. They want you to put some money in the savings account. Absolutely. They want you to go ahead and pay your mortgage, right? Yeah. Let's go ahead and pay your car payment. That's right. Okay. And let's go ahead and pay the credit card, right? Let's go ahead and pay your line of credit. Oh, by the way, you owe your home equity line of credit. Oh, and by the way, you owe this one and that one and the other one. And I'm saying stop. Because next thing you know, you're going to be taking out a consolidation loan when all you have to do is consolidate your line. Now, I know that you don't need a credit card. You don't need a line of credit, okay, to implement the Velocity banking method. That's very true. But if you do, that's another tool, not a bill, right? That's another tool that you can use to get out of this cycle, to get out of this wheel, because they're segregating you. Do you see how that looks like a wheel? It is a wheel. It's the wheel of debt that we're getting you out of. Now, let's go ahead and go over here to the only loan they have. I do want to commend you on that. Okay. Now, I do want to let you know that if you want to get another loan, guess what? You can. Because you just shared with me that your cash flow, right? Your cash flow is $700. Now, you can do a lot with this cash flow of $700, all right? And we want to let you know, yeah, let's go ahead and put it on there. Cash flow of $700 you can do a lot with. But first of all, we want to see which line of credit we can use to pay down this loan. Now, I know what you're saying. You're thinking, wait a minute, CJ, don't I need to pay down my line of credit first before I put towards? Yes, and you can do that. You can do that. However, You don't have to do that. Remember, velocity banking is all about options. So what we're going to look at, we're going to look at the most limits on a line of credit that we have. And the most limit that we have here is $25K. Now we do have a balance of $13K. That only leaves us with $12,000 to utilize. However, it depends how bad do you want this paid off. Because if you want it paid off very quickly, you can actually put $10,000 towards the principal. $10,000 towards the principal, and what is that going to do to the interest? That's right. When you subtract the principal, you're also subtracting the interest, because this interest rate here, which is very interesting, it feeds off of the principal. So the lower the principal, the lower the interest dollars. Isn't that beautiful? So let's just say, you took your 10,000, okay, and instead of buying Yeezys with it, instead of buying J's with it, you went ahead and put it towards this principal. Well, now the 7.8% is going to feed off of 200,000 instead of $210,000, right? However, wait a minute. We still have the balance. And not only balance, but we've got balances. So what's up with that? Absolutely. So what we can do there is we can stop segregating our income and start consolidating our income inside of a line of credit. $3,900, let's just round it up to $4,000. Now that we are at $24,000, how long is it going to take us to pay that off with a $700 cash flow? Let's go ahead and calculate it right now. So after calculating it all out, we see that the balance, $24,000 divided by $700, is going to take us approximately 3 years to pay off. Now, I admit that's not really exciting at all until you realize nothing changed. Until you realize that you don't have to get a second job. You didn't have to discount your expenses. You didn't have to do anything like that. Why? Because you simply were using your line of credit as your new checking account. So the income went inside of here. So whatever his monthly payment, his minimum monthly payment was, he's not paying that. This leftover amount, this $700, right? Because you're going to be using this as your new checking account. You're also going to be paying your expenses from that as well. So it's not like you have to write a check for however the minimum monthly payment was. You're already paying them, remember? $3,900. What changed? Please comment below. What changed? There is no extra stress. There is no extra debt. You're going to pay this off in 3 years. I don't know what the bank's plan was for you to pay that off. Like, what is it? Maybe 10? I don't know. And of course, now you're a Velocity banker and you're actually getting rid of mortgages, right? In as little as 5 to 10 years, right? Now the balance is $24,000. I have no idea what the bank's plan was for you, but I do know this. I do know our plans for you, and their plans to help you and not to harm you, to give you an expected end, to give you a month and a year on when you can pay all of that off. So even if you had a mortgage, if you had a car payment, that wouldn't matter, because we are not paying it the regular way anymore. Now we're using tools, we're using dates, we're using time, we're using the principle, and we're looking, not us, but our system is looking at everything that you have, and it's saying, I know you wanted to pay it off in 20, 50 years like the bank wants you to, but if you follow this tried and true plan, this tried and true system, we can actually pay it off much greater in a much better time than what the bank plan had for you. Now, you may be thinking, well, CJ, I see the line of credit. I see the loans. However, Isn't there a better way to do this? And my answer to you is yes. There is a better way to pay this off in as little as 5 to 10 years. There's a way better way. You know where it's found? In a system. In a system that's been tried. In a system that's been trusted. In a system that has actually helped to pay over $2.5 billion in debt off, using many of the velocity banking concepts and beyond. I can just be honest with you. So, but this is one way to do it. Making sure that your principal is taken down. Making sure that you don't have the wheel of debt. Okay? Making sure that your income is not as segregated. Making sure what to do with the money that you have. Does that make sense? And so, folks, if you're looking for it, and it's on the screen, it's been on the screen, right? Let's go ahead and please schedule it with us so we can customize you. We want to customize a plan for you so we can show you, give you an expected end, give you a month and a year where you can be out of debt. It's not going to be 30 years, right? Hey, if it was 30 years, go ahead and go with Lending Tree or something like that. Okay, shout out to Lending Tree. Okay, but it's going to be less, way less than 30 years, most likely way less than 20 years. In as little as 5 to 10 years, that's our goal for you, all right? God bless you, and you guys take care.